Do not buy Tesla shares right now. Here's why you should hold off. And later in this video, I'm going to explain when you should think about picking up your next batch of share. Tesla just reported earnings a few hours ago, and there are things we have to unpack from this report that you need to know as an investor. The earnings per share numbers and the revenue totals were in line with expectations, but the decision from Elon Musk to chop the price of Tesla vehicles has had a severe impact on the overall profit margin of the company. Let's continue to unpack this because it is important stuff. Even though the revenue numbers are looking pretty good here in the chart with the blue, and yellow, let's unpack a couple more numbers down here. And the vehicle deliveries were good, like I said, 400K, not something you want to worry about because deliveries are going up. The fact is that though they're not being sold for as much, which leads to less overall profit in their operating margins. And there are some numbers we have to look at to deal with this a little bit more. I will link this article in the description for this video, the metrics you should see coming out of earnings report for Tesla. And the big thing here is we talked about revenue went up. It was in line with expectations, which is good. But however, the gross margin, which is Tesla's bread and butter in what they do and how they compete, their profit margins are next to none. No one, they have this great big competitive advantage with their profit margins compared to the GMs, the high-end guys, the Fords, the Toyotas. They make almost $10,000 per unit per vehicle as of Q3 2022. This was just released on Reuters. Okay. When you look at that, they have the option to kind of drop their prices and still remain profitable and revenue can grow. And even though their gross margins are declining, it may prove to be the right factor later on, but not right now because the stock price is not reacting well to this. It is going down after hours, and it is something to be aware of because we could be in for a short-term slide. One other thing to look at in here is that the operating cash declined by 37%. Myself personally, I like to see high free cash flow numbers, and this number down here going down to 441 million isn't great. I understand you have to spend money to make money sometimes, but you want to have a strong free cash flow position to withstand times of uncertainty and to expand the empire. So this to me is a huge number, decreasing 80%. So something to be aware of as well. And the other thing to think about is why is Elon cutting prices right now? Well, it's in response to the interest rate hikes that we've seen in the US and in Canada and across the globe. We are paying more for things. Things are more expensive in terms of the borrowing fees. So cutting rates is one way to combat that and hopefully get people to buy. It hasn't worked out yet for margin wise, but they are selling a number of vehicles higher than they expected. So long term, this could be a good play. But we have to look at the chart and the technical analysis part of this as well to understand that things are happening with the chart. Things are happening after hours. We closed today at Tesla at 180.59. It was down about 6% after hours, right around 169.73. And this is what I'm seeing technically why it doesn't make sense to buy Tesla right now. This drop is going to be exacerbated, or it's going to keep declining. As soon as it drops below this line here, this is the main area, that candlestick wick, 164.29. If it goes underneath that second red line, it is going to run and it has a chance to really fill out. 164.29 could come down here to 154.70. That's the next kind of level right there. And if it gets down that far, we're going to go in yellow here. It can then look to fill this little gap here. If we zoom in, see this gap between this candlestick right here and this one right here? It's this space right in here. It wants to fill this gap. The charts don't like to leave gaps. The market doesn't like to leave gaps. So that's where it's going to head if it breaks through again, this 164 area, and then heads lower. So in the next coming days, I'm looking for major support here at 164. If it catches and bounces up higher, that could temporarily relieve the run. But just seeing what the market did after hours down here and how this is being reacted to, I'm seeing that I'm thinking that it's going to be a lot of bearish pressure to sell on the open tomorrow. Time will tell, but I'm going to look for 164.29, potentially 155, and the things get really sour, really ugly. Obviously, we have this next area down here at this candlestick kind of convention down here, I'm going to call it, for lack of a better term, 144, and the ultimate low down there, we topped it at 102 and change. That was earlier back in January of 2023. Tesla is up roughly 48% year over year. It was going into this earnings report. However, downward pressure is going to mount, so I don't want to be buying shares right now. Additionally, the RSI is turning negative. It is below 50 and heading lower. The volume of Tesla is also going down. It has been a smooth transition lower, which doesn't sustain a run of buyer intent. And if I just get rid of some of these lines here, we're going to do a little bit more technical analysis for you. We're going to go ahead and just take these off. and look at the chart, the candlesticks chart that we're looking at, we have these different lines that we have to draw in, okay? Some trend lines. We have a lower set of highs coming through, okay? So the highs are becoming lower. And we also have, we draw it in right here. We have this almost squeeze pattern coming through. We'll just top it in right there, and it actually hits up really nicely with the candlestick close there. I'll just tighten this one up as well. Now this pattern is calling and looking for a break lower, in my opinion, because of this squeeze. We're going to see a breakout, and we've maybe already seen it after hours with the move lower for Tesla. Once this trend line is broken down, the pattern becomes to kind of fill in the next area down here, down lower. And this kind of area is left for a little while until the price accumulates and builds some more momentum in this area down here on the chart. If we see a quick bounce down and then reject and get back within this pattern, maybe there's some continuation, but I don't like to see the lower highs and this kind of squeeze pattern coming into fruition. There would have to be a nice spike in volume to the upside, and we'll maybe see that in the coming days. But to me, this looks like a bearish pattern because of the RSI, the volume, the candlestick setup, and the want to go back and just hit this area, break through, and then fill this gap on the chart from back in January. In order for me to want to be positive and looking to buy this stock and actually get back in the game, what I want to see are a few things. First, I want to see a break above the 50-day moving average right here. This line right here, the yellow 50-day moving average. Once the price gets above that and actually breaks above, comes back down to retest, and then actually holds above that line and goes up higher, that's what I want to see from Tesla as one part of the equation for me to get a little bit excited to get in there. The next thing would be for this RSI down here to turn positive, get above 50, and start making a movement higher up to this 70 area. RSI for me is a big one, and you can use whatever indicator you want, but that one to me is just, it's a momentum study. And when momentum is going upwards, I tend to ride that out and see that as a super positive thing. One other thing to think about would be some good seasonality. Tesla's seasonality is pretty strong in the summertime, which you can see right here. But given that we've been operating more of an interest rate based market versus a seasonality driven market, we have to take into consideration seasonality with the interest rate moves from the Federal Reserve as well. If interest rates are tabled or there's a potential that they're going to reverse their policy, but just as long as they don't hike going into the next meeting, and that could be seen as a bullish sign and a catalyst for a strong move upwards. But if they decide to kind of raise rates a little bit more, it's likely to push things a little bit lower, because again, when rates go up, the rate to borrow goes up, the rate for companies to borrow goes up, so they're paying more. You and myself, the consumers, are paying more as well for these vehicles, so we can't access as much cash, and that leads to a decline in the overall margin and operating profits for the company. What do you think is going to happen? Drop a comment. Let me know if you think Tesla is a buy or a sell right now. And if you got some value out of this video today, please consider subscribing to the channel. It would mean a heck of a lot for you to do so. Stay tuned for more videos, more content to come every Monday, Wednesday, and Friday. Thank you so much for watching this video, and I will catch you guys on the next one.